Hello, South Florida.
We have a very fresh idea.
Lots of very, very successful contractors, vendors, drivers, AOs.
You are about to see power, performance,
progress intelligently planned.
PCs, maybe even some FedEx employees.
Well, put away the pot roast and get a sitter.
This guy's really pressing his luck.
Tuesday nights, 9 o'clock.
The world's largest electronic game room, state-of-the-art video game.
We would love to see everyone there.
Just one of these. Ta-da!
Scared you, didn't I?
And for now, check out our badass intro.
Yeah, I didn't expect to see two dummies.
Say something, please.
Oh, we gotta hurry, though.
Hey, where are you going?
Hello.
Welcome back.
Hello. Welcome, everybody, to another very exciting episode Around the Hub, starring me, Rick Dunn, and my wonderful amigo, Christian.
That was good.
Yeah.
Nice job, Vin. Crushed it.
What up, man? How's your weekend so far?
It's going well. No complaints. Got some things going. What's your week been like?
Well, I got back from Toronto. I was with some family this weekend. It was a really nice time. You know, I got to be with people who I really care about, who really care about me. And so, you know, it was really nice being in Toronto with all my family.
Mm-hmm. You're talking about my family.
You weren't there, so you tell me.
You got me there, man. You got me there.
All right. So everybody, let me tell you what's going on tonight, because as always, we have to, you know, stay flexible because tonight's changed a little bit. So I was supposed to be in Texas working on my badass new FedEx line haul deal. Unfortunately, that hasn't worked out yet because I don't know if I want to say just why yet, but I will share that information. But things don't always go as planned. So we had 2 interviews recorded that we were going to play, and wherever I was, I could kind of comment and stuff. Didn't happen, but the interviews kind of went really well. And as opposed to just posting them on YouTube, I wanted to play them here. The first is with AP Financial, and I talk about them a lot, and I try to be very unbiased with a lot of the vendors that we talk about, and we want to share everybody's information, but they don't have any competition right now in terms of what they do for my clients and the people who are new contractors. And so we continue to sing their praises, specifically Emily. She's my contact there. She is absolutely wonderful. And we have a wonderful kind of very insightful interview with her and Ryan from AP Financial. So we have Emily on with us. Can we bring Emily? Hey, Emily.
Hi. Thanks for having me on tonight.
As always, the pleasure is all ours, more so Christian's. But so the show's designed to be interactive. That's what in my mind when we started Around the Hub, we wanted people to interact, and I think maybe sometimes the show's a little late for some people, and our views have actually gone up, which is pretty exciting, but they're not live a lot of times. And so what we're starting tonight, I think, is we're going to direct people into our chat, you know, ask questions. And so as we are watching an interview with Emily, dropping knowledge bombs on all of us, she is available to answer questions in the chat. So she's hanging out. So if you have questions related to truck financing specifically, ask away. So thank you for being here. Anything you'd like to throw out there? Anything we want to plug? What's going down?
I don't think I have anything other than what was in the interview.
All right. So, for anybody who's watching this, like after the fact, one, check your priorities because you should have been here live. And two, if you do want to reach out to Emily because you want all of the best knowledge about truck financing in the game, feel free to reach out to her. How do you prefer people to touch base with you? That Android phone you use with the green texting?
I'm sorry. It's an app. It's on an iPhone. You know that. But yes, if you could reach out to me on my non-iPhone for phone or text,
You
please.
just
That
lost
would
you
be
just lost
great.
half your business right there.
You always say that.
Yes.
Emily's the only option.
740-0192. Emily, thank you so much for being here, and we'll be in the chat with you because we are going to play this interview. So Vin, why don't we move right on to it?
Hey guys, we're here with AP Equipment Financing. I'm here with Emily and Ryan. Emily and Ryan, can you guys tell us, what does AP do?
AP Equipment Financing is a direct lender. We provide equipment financing for businesses across the United States. And my role within the company is truck financing specific to FedEx ground contractors.
So
Huge.
I met Emily. We took a beautiful photo together in Las Vegas, right? That's how we started. And can we post the picture right here? So found out, kind of got introduced to AP and started talking to Emily, and you guys offer trucks for line haul contractors, but you offer trucks for brand new FedEx line haul contractors, and you seem to have very little competition in that game. There's not a customer that we've had come through over the past year that I haven't sent directly to Emily as soon as they get their V number and we know that deal's happening and they need to buy trucks. They're going to AP because the deals are great and you're doing them. How did that happen? Can you kind of walk us through why you guys chose to enter that segment or how that whole scenario started?
Yeah, I can. Ryan.
Yeah, I can take that one. So I've been with the company for about 12 years, and we really heard about FedEx Ground as an industry. Really, we started going after it in 2010, and we started more so on the pickup and delivery side of the business. I know the context of this is line haul, but back then we were calling up pickup and delivery ground contractors and saying, hey, you need to buy these trucks. We can lend you the money for these trucks. And believe it or not, back then, that was enough to get business done, because you got to remember in 2010, we were still coming out of the Great Recession and obtaining lending of any kind was tough. Mm-hmm. And, more and more we started to hear from people, hey, it's great that you can get me approved for financing. Where the heck do I find these trucks? And again, I'm talking about the pickup and delivery side of the business. So we realized that we needed to be able to bring the trucks to the end user and be able to pick up the phone and call a FedEx Ground contractor and say, we're AP Equipment Financing. We're here to get your finance and leasing business. But in order to do that, we will actually get you the truck. Tell us what you need. We'll make sure that you're getting a fair price. We'll actually arrange the transportation directly to your terminal and take care of the financing and leasing. And you only need to talk to one person. And then branching out from that, obviously we started to talk to the line haul side of the business too. It just happened that way. A lot of contractors do both. Or we would talk to someone expecting to hear from a pickup and delivery contractor, and they would say, I don't do any of that. I'm on the line haul side of the business. And so as we started to learn more about it, admittedly, we had very little or almost no presence in over-the-road truck financing, but we realized, FedEx Ground, this is an amazing program for trucking businesses. They get a paycheck every Friday. They don't have to worry about accounts receivable. Rick, you and I just had a conversation about all this stuff the other day, just about how amazing of an opportunity it is to be a FedEx Ground line haul contractor. And there's trade-offs for sure, compared to just having your own authority and trucking elsewhere. But we really have gone all in on FedEx. There are other industries that we're involved with, but FedEx is far and away our number one, to the point where we actually have a team of 10 salespeople, Emily here being one of them, where that is all they do all day, every day. They talk to FedEx Ground contractors and don't do anything else. So it's something that we really specialize in, and we take a lot of pride in that.
Is the reason why you guys are so willing to lend to the FedEx contractors, it simply, and I know the trucking industry can be volatile, and you could lend, money, $500,000 to go buy 3 trucks, and then that company's not running the same runs, not getting the same rates, the drivers aren't moving. So is the consistency of the FedEx line haul world why AP is willing to extend their money out to contractors where maybe the rest of the trucking industry? Is it simply the consistency?
100%. You nailed it. Trucking is a boom and bust industry, but that is less so in FedEx. And we know, even for someone brand new, if someone acquires a business, even if it's unassigned runs, we know that they're going to be getting business from day one. They're not going to have issues with collections. And, even if things don't go perfect for them, that just means they're not getting as much revenue as they had anticipated. They're still getting revenue from day one. And so we have a thorough understanding of the model that gives us an advantage over other lenders. If you try to go explain the FedEx business to a bank or some banker who just graduated from college and they're trying to figure out whether or not they're going to underwrite your loan, it is something tough to explain. There's no balance sheet, right? I mean, the only thing you have on the balance sheet for the most part are trucks and sometimes some blue sky for the actual business purchase. So again, that the fact that we're experts and we choose to focus on the industry, that gives us an advantage.
Kelsey, can we make sure we cut that and put it right on the front of the website for Line Haul Solutions, please? Thank you. That's
huge. Yeah.
Phenomenal line haul advertisement right there.
Do you view your terms that you give out any differently between the assigned and unassigned? Like if I'm a new contractor, I'm coming with 2 unassigned. Do you view the terms you give out any differently?
Ooh, good question.
It is a good question. We look at every deal individually. So the answer is sort of. If it's a really strong applicant who is going to qualify for the trucks anyway, it doesn't matter, whether it's assigned or unassigned. But if it's an applicant who maybe isn't quite as strong, maybe doesn't have quite as much experience either in logistics or management or some of the background that we tend to look for in an applicant, knowing that they are getting dedicated runs can make the difference between being able to approve them or not, if it's somebody who's not quite as strong of a profile.
Can we dig in a little more there, Emily? I know there's times I've sent you someone and the first thing you say is, what's their EIN? I'm not going to respond to this email if they don't have their EIN set up. And I'm like, it's taken 2 weeks to set it up. Just tell me if I get it approved or not. But with that, so brand new, zero experience in the trucking industry, which is 90% of the people that are coming to us trying to buy, our businesses that are for sale. What are you qualifying them on? How can I tell somebody, hey, look, you have zero experience in the trucking industry. Emily doesn't care. AP is good. You're good to go. We'll get this deal done for you. They need 2-3 trucks. What separates the people where you're lending good terms to and people where you kick an email back and said, hey, we can't do anything for him right now? Give me those qualifications.
The primary qualifications for a brand new line haul contractor is going to be personal credit, personal liquidity, and experience as far as their background in whether it's entrepreneurship, whether they've perhaps had some sort of management positions in the past. Just knowing that they have experience managing people is important to us because we know that as a contractor, managing your staff is going to be one of your biggest challenges. So that is something that we look at. The liquidity piece, obviously, if you are a little bit younger, your credit history might not be as much, and sometimes that can be a challenge. So that it doesn't mean that it's insurmountable by any means, but as a brand new, younger contractor, we are going to be looking that you've got some credit history and more specifically that you've got some liquidity. So there's always a little bit of give and take between those 3 things. So if you've got a lot of one and not quite as much of the other, that's okay. If you don't have much of any of them, those are the ones that are going to be challenging to get done.
But in the deals that I've sent you, I mean, we're probably batting 900, like we're 90% really. 9, we're financing at every 10. I mean, that's a pretty damn good ratio of people that you're getting approved that are brand new businesses. Untouchable from anything that I found right now. Now, in the past, you think you had some maybe other competitors in the market. They're gone. They won't touch new contractors. A lot of times they won't touch trucking in general because I'm sure, the money they lent out because of trucking ruining it for the line haul, they won't consider it. So I know we've been very appreciative and all of our customers are very appreciative for what you guys have done for them.
I appreciate you as well. Thank you so much. I think we make a pretty good team, Rick.
Hell yes.
What type of customers come to you usually? Is it those that can't afford trucks right now and need to do it with financing, or is it people just want to get creative in terms of spreading out their costs? What does that customer look like?
It's a combination of both. Obviously, your clients are going to be the brand new side. We do work with a lot of established contractors as well, who may have maxed out their lines of credit at their local bank and they don't have any more funding available to them locally, or they just want to diversify. You know, in line haul, you need to buy a lot of trucks. That winds up to be a lot of money. So having multiple lenders that you have relationships with is frequently an ideal scenario to have. So, you know, sometimes I'm not always the only solution. As they gain experience, a lot of times I'm one of their solutions for financing. So it's a matter of what they're trying to get. One thing we haven't discussed is the actual trucks themselves that they're purchasing. One of the areas that we do tend to excel over a bank or one of the other lenders that will have a harder time understanding the transaction is for a contractor buying from another contractor. Sometimes that gets a little bit tricky if you're working through one of the more traditional lending sources, and it can be pretty long and drawn out and painful. We do try to make that as quick and simple as possible. And I believe that to be true. Would you agree in your experience, Rick, that that's usually what happens?
Oh, for sure. So when you have a sale between contractors, I mean, most of the time it's going to include those trucks. So the ability for the new contractor to be able to get those trucks financed, reduce their capital outlay in the deal, like, can sometimes make or break a deal. So with that brand new contractor, you know, having somebody to go to make sure we get those trucks financed, it gets entire deal done that in 2023, the deal wouldn't get done otherwise because there's not enough cash to make that deal happen. So as we're trying to slide that deal through, you know, it's tight. People are making negotiations and concessions on either side to not have to say, oh, you know, we are missing another 250 grand to get this deal done because we do have the ability to finance those trucks. Yes, it's a huge deal in terms of getting many of our deals done.
And it's a lot less painless than trying to do SBA.
Oh, yes. Yes. Let's talk about the trucks. You brought up the trucks, right? The state of the truck market. I mean, it was insanity. You couldn't get anything, no new trucks. You're paying double the value. What are we looking at right now? And it's April, almost May of 23. How's the market looking like on your end?
From what I'm seeing, the market is improving in 2023. At the end of 2022, it felt like things were exorbitantly overpriced on the used side, impossible to get on the new side. I feel like we're seeing a little bit of softening in the used market. For example, a dealer notified us of some 2020 Cascadia sleepers with about 350,000 miles. He has about 10 of them that are FedEx spec, and he's selling them for $92,000. So if anybody wants one, let me know.
Where's my email, Emily?
Feels right. I'm going to get it to you. I'm going to send it to you as soon as we're done. But
okay.
The
are they white?
Yes.
Okay. FCAM?
Yes.
Lane departure?
Got to double check. Do you know, Ryan?
They have them. Yeah.
Oh,
no, they're FedEx compliant.
You sent me that email. Sorry, whoever's watching this, I've already taken them by the time you're watching this video. Too bad.
But the moral of the story is I feel like those same trucks about 5 months ago would have been 110, 120 list price pretty easily.
Yeah, for sure.
So I think that the used truck market is, the prices are coming down. I have been seeing a few new on the market. I think a lot of it is because somebody had ordered them previously and then turned down accepting the orders. So we're seeing handfuls here and there coming up for new truck availability as well.
Can I give you, and I don't know if this is something you can change, although it'd be really nice if you guys could. Imagine all the people that we've sent to you buying those 21 to 22 Cascadias, 250,000 miles right now that are paying a good chunk of money for them, but they're great trucks for their dedicated team runs they're buying for line. We've had a lot of those people coming to you lately. I wish the industry knew how miserable it is trying to search for a truck that has FCAM. It needs to be something that dealers just need to include that as a, when your search function, does it have forward collision mitigation? Can you tell the entire truck industry, please, to give us a search function so we can just look for only FedEx, FedEx approved trucks?
I can only reach one dealer at a time, but I'm trying. And it's funny because if you're, Yeah, if you're reaching out to dealers, it's interesting because if they don't know FedEx, they don't even know if the truck has FCAM when you call them.
What is FCAM? What does that even mean? You know, it's hard to get into.
Mm-hmm.
And we know, and so for our customers, hey, you should buy this truck right here. Well, can you give me a range of trucks? Because no, a lot of times it's, look, this is the truck that I found, and I've spent an hour looking for this truck. I'm not looking anymore. I had to request a quote sheet, I had to find the information. I highlighted it for you, made it real easy. You need to buy this truck. Oh, I'm gonna go look. I'm gonna get on Truck Paper, and I'm gonna get on, different Facebook groups and stuff. Okay, good. You better set aside hours, weeks, because you're going to send a lot of message, won't get response when you ask them, oh, does this truck have forward collision? And you might, I could go on this forever. We're probably going to end up cutting my rants, but hey, the difference between the beeping versus the slamming on the brakes, the mitigation versus the avoidance versus the warning system versus every different truck manufacturer calls it something different. Good luck. You go do this on your own, customers. Anyway, it'd be nice if the trucking could, my rant's
it would.
over. My rant's over.
I completely agree with your rant.
The moral story being,
sorry, Christian.
No, I was going to say the moral story being that we have new contractors coming to this space. If they need trucks, reach out to AP Financing. You guys help them not only find trucks, but also just quite frankly afford them. Moral story, it's the biggest thing, right? New contractors sometimes get lost in that. So these are the people to reach out to.
And I think, oh my God, I don't know when you're starting or finishing. You're gonna flow into your next statement. But what? Now I'm excited.
I feel the same way.
Jeez, we gotta work on our communication.
We can cut this. Go ahead.
No, you go. Were you about to take it into Ryan, the podcast?
Yeah, you're gonna do it.
Okay, fine. But in addition to AP, being the go-to truck financer in all of FedEx line haul, Ryan's actually doing something extremely cool, which is you've come out with a podcast, Rooting for Success, obviously over your right shoulder, where you are, highlighting a lot of the unique aspects and going at a more, I'd say, human approach in terms of different contractors and bringing out their particular experiences. I've listened to most of them at this point. I've been on one, episode number 2, coming at you guys soon enough. But tell us how the podcast got started, man. Where did that come from?
Yeah, Rick, so again, I've been doing this for a long time, talking to FedEx contractors. And, in the business of helping contractors find trucks and obtain financing, we have to learn about their story. So I get to hear about where they came from, what was their professional background and personal background before they ever heard of FedEx. And then we have them walk us through, how did you hear about the business? What was your experience like getting in? And one of the takeaways I had from all of those thousands of conversations is that there is a very diverse set of people who get into this business, and they've got some really interesting stories to tell. And I almost thought, man, these stories are kind of being wasted on me. I have to hear them because it's part of our job, but I'm sure that other people would love to hear this stuff also. So I had that thought in the back of my mind for a very long time. And, more recently, over the past couple of years in particular, there's really it's been demonstrated that there is a need for people to connect with each other. I have to imagine there's a lot of contractors who show up to their hub or their terminal, and that maybe they talk with the other contractors in that building, but they're not talking to the contractors in the city over, and they're definitely not talking to contractors all across the country. And so I just think that there's a need for people to hear these stories and exchange ideas, and to get some of today's top performers to give them a megaphone. Really, that's what we're doing, is we're giving people a platform to share their stories and ideas for other people to hear. Obviously, it's a good thing for us because it gets us more exposure for our company and our services. But man, I got to tell you, I'm having a ton of fun with it. We've been talking to some really interesting people. Rick, thank you for coming on twice at this point. We had you on episode number 2, and you're also featured on episode number 10, which we'll be releasing here this week. And
awesome.
I've just been having a ton of fun with it. And even more important than that, we're getting good feedback from people. We're getting contractors reaching out to us and saying, hey, thank you for doing this. I listen to it every single week. could you please release 2 episodes a week? And I just don't know that we'll be able to swing that quite yet, because
so much
as
work,
you guys
people.
well
That's
know,
a lot of work.
oh man, it's a lot of work. Yeah.
We were going to do a weekly, live podcasts around the hub, and we had to take a little hiatus because that's a lot of work producing and that content, and so much incredible material out there. But to get that out consistently, it takes a lot of work behind the scenes. So I know what goes into your episodes, but for anybody who's watching this, Ryan has a very unique perspective. And I think anybody who's looking to get into line haul, into entrepreneurship, buying a business, like, listen to his stuff, because you'll catch so many tidbits. I learn a lot, when I watch. So fantastic. So I just urge you, continue, keep them coming out. They're appreciated. I know you're going to continue to grow. We'll link, when we post this, we'll make sure we link to how to get directly to the podcast. Is there a place you prefer people to go to listen to your podcast?
Wherever podcasts are found. Most of our listeners use Spotify or Apple Podcasts. Those seem to be the 2 main ones, but there's a ton of different places that you can find podcasts. Look us up on social media, Routing for Success. And if you use Spotify, Apple Podcasts, or any other podcatcher app, you can like and subscribe, get a notification every Tuesday morning when we come out with an episode. And the only other thing I'll mention, Rick, is, the thing that I think makes our podcast a little bit different from the other options that are out there is I appreciate you saying that I have a lot of insight, but I actually don't feel like I have much insight. And one of the things that makes our podcast different is I'm mostly just asking questions. There's a lot of content out there related to FedEx contracting that are people saying, it's a talking head saying, hey, I know the answers. I'm the expert. Listen to me. That's not what we're about at all.
What kind of shot was that, Ryan? Dude.
Hey, there's a need for that, man.
Oh, he's getting aggressive this morning. All right.
You can cut that out if you want to.
No, definitely not, man.
I think, and anyone can correct me if I'm wrong on this, but I think, ours is one of the only ones where I'm not shining the spotlight on me. I'm shining it on someone else every single episode. And I say, no one wants to hear from me, the finance guy, about this stuff. They want to hear from today's top contractors. They want to hear from Rick Dunn. They want to hear from David Delgado. We just released a podcast episode. People love that guy. We'll probably get him to come back on.
That's a good one.
And the last thing I'll say, the other thing is I edit a ton. So, I talk to people for like an hour, and honestly, I edit that down to like 30 minutes. And that's just, we've received some criticism for that. I think some people out there want the longer form, but ours is meant to be listened to, car ride to work, car ride back, boom, an entire episode done. And you do that once per week. So that's what we're all about.
Keep it up, man. Great work. I've heard people, like, our little internal messages we send out, we'll send it out. Hey, check this out. This is directly related to this part of your business. So for us, we can kind of say, look, I don't need to talk to you about this. Just listen to Ryan, listen to this episode. Somebody else is going to explain this for you. Don't take my word for it. Take this person's word for it. So it's been great. Guys, as always, thank you. I can't thank both of you enough. Emily, you have made my job so much easier and more financially lucrative for my business. So that's, the most praise I could probably ever bestow on somebody. So
thank you.
And Ryan, again, had a lot of fun on yours, allowing me to come on, kind of talk through some things. Very appreciative. So I thank you both. And for anybody watching, AP's just, a phenomenal company. They're great. And I've met now a lot of the other people you guys work with, and everybody's just so intelligent, so willing to assist, kind, empathetic. And I think that's something you guys bring to the table, and obviously will continue to as well for our customers and line haul as a whole. So thank you.
Yeah, Rick, the appreciation's mutual for sure. And for everybody listening, I can't speak highly enough of Line Haul Solutions. There's a lot of business brokers out there, but the job of a broker is to finish the transaction and then shake everyone's hand and send them on their way. Line Haul Solutions, what these guys do, they're supporting people after the sale, particularly for the buyer coming into the business who may or may not have any experience. That's incredibly important because, man, I'll tell you, you can mess up, and if you mess up, FedEx is not forgiving. So you need to make sure you have it right from day one. So I think I speak for a lot of people out there where we appreciate you guys. Thank you.
Yes, sir. Thank you. All right, guys.
Thank you, Ryan. Thank you, Emily.
Day. Anything you'd like to say in closing, Emily?
Nothing that hasn't been said. We appreciate you. Look forward to continuing to do business with your contractors as they come in, and hopefully for years to come.
For sure. All right, guys, have a great day. Talk to you very soon.
Thanks,
Thank you.
everybody. See ya.
Yes, back again.
So, I mean, imagine you're a new contractor, you're trying to get to FedEx. I allocate $600K, to test this venture out, right? Buying 2 dedicated runs, $500K, let's say, and about $100K left in capital. It's like you're gonna have expenses. You want operating capital. You're not gonna blow it on a truck, so it kind of makes sense to go down this route, right? Get your trucks financed. You're not just gonna spend all your money. You have money to operate with, and it's not just in one place.
Yeah,
So I think.
I completely agree, and I think a lot of times with our people, it's, hey, I have this money to spend, in cash, and I'm still logged in to. We have people that will reach out. We get the process started, and I think during that process, it's like, hey, you're buying 2 trucks. We can call Emily up and get you 150 grand financing off this truck. That's $150,000 that's sitting in your bank account that's ready to, buy more runs. Things happen quickly. Deals happen, runs become available. Once you become a contractor, you don't need to buy 2 anymore. And it doesn't take, 2 months to get a deal done. We can get it done in 2 weeks. And so having cash available to be prepared for that next opportunity, it's priceless. And so, yes, if you can borrow money, even at, the slightly increased rates that we're seeing right now, it's kind of like, why not be prepared for that next one?
Yeah, you win growth opportunities, dedicated unassigned runs. You don't have to go and put that capital up front. You can go to AP financing. Makes sense.
Yep, for sure. And also, Ryan's podcast it's just cool. We sit up here and you ask questions and you try to ask these insightful questions that, bring out something new for you to learn and whoever's watching to learn. Ryan got really good at that really quickly. You listen to like our first episode and then the episode I just did with him. It's like, whoa, where did you get that kind of insight? So I encourage anybody, especially the new contractors, the people who are interested in FedEx Line Haul, like get that insight from him and his guests that he's having on, especially the ones obviously that are line haul related. He does P&D stuff. I can't say that I listen to those. No offense. Sorry, Ryan. But the line haul stuff, I'm all over. So check that out. It's worth a listen, and I learn something every time that I listen to one of his.
Good point. All right, so we talked about financing. What else do we have?
So we had a conversation I wanted to play on here. He's been on with us before. This is Eric, the CPA, and he is Eric.
Heavily requested.
Yeah, stop sending me emails asking how to get in touch with Eric. Just email him directly.
I don't want to talk to you. I just want Eric. What's his email?
God, I get more calls from like, hey, what's Eric's phone number? I'd like him to look over this. Let me let Eric fact check. Whatever. He's a luxury. I've had the opportunity to run, everything by him. If I have a question, and it's all tied in, right? Why do we do this? We make money. Why are we entrepreneurs? We want to make money. Well, government wants some of that money too. So for me, it's always an exciting game of, hey, how much money can I legally
not
give the government? No, Christina, they you're busy enough.
Gatekeeper,
yeah. It's 9 p.m. So we got an interview with Eric, and this was specifically focused on depreciation. I had questions, and I know lots of people have that question, the semi-truck depreciation in a business, and there's so many things we didn't get to. Eric is very easy. Reach out to him if you have any questions. You can ask us, and we will get that information as well. So, Vin, let's play that conversation we had with Eric. We have an exciting little segment for you guys. Something new. We are with Eric, the CPA. He is probably the most popular guest we've had on because lots of time I get people that call me up just to ask for Eric's information.
I get that too.
Yeah. Hey, what's that accountant guy? Give me his information. It's like, what about this deal that need to get paid on? Well, just let me talk to Derek. Let me talk to Eric. So Eric, welcome, man. How are you? How's everything?
Things are going well. Things are actually going real well, and thank you for having me as always. And again, whatever I can give back to the rest of the community, happy to.
For those don't know, Eric owns multiple FedEx line haul businesses, and he is also the owner of many Jackson Hewitts.
Jackson
Right?
Hewitt Tax Service.
All
Yeah,
right.
well, I wouldn't say many, but yeah, I think I still have 12 left, 12 offices.
But you are a CPA and you still are a practicing CPA. So last month was a very busy time for you, and you're still CPAing.
Yes, yeah. In addition, I've got 3 FedEx businesses, 20 dedicated runs, the Jackson Hewitt Tax Service, and then I also have a corporate accounting practice where we do accounting for a number of Jackson Hewitt franchisees. And then currently, I want to say there's 6 or 7 FedEx smaller contractors have come to us to do their payroll and accounting work and to provide advice. And I'm looking to grow as well right now in additional FedEx businesses.
Eric, can you quickly recap for us what made you go from, professional CPA, successful in that field, and into FedEx?
Yeah, it started about 8 years ago. I was just looking to diversify my business holdings. Not to make a whole long story short, but everybody has heard of TurboTax and the do-it-yourself market, and that took a bite out of my tax preparation businesses with Jackson Hewitt Tax Service. So 8 years ago, one of my clients sold his Jackson Hewitt Tax Service franchise. A year later, he got into FedEx, told me all about it, and 6 months after that, I bought my first operation in Woodbridge, New Jersey. As I think I said in the other one, I struggled at first. There was a lot to learn in this business, but I doubled down and grew the business, bought some more runs, and then in the last couple of years, I've purchased even more FedEx operations from other contractors through SBA financing.
Awesome. So overall, happy with the space and anticipated continuing to grow there. Is that right?
Yeah. At this point, looking for further deals that make sense, for my business purposes. So yeah, it's got to fit my niche, the right operation, but still looking to grow the FedEx businesses and grow the accounting practice. My Jackson Hewitt days are, they're probably around for maybe another 4 or 5 years, but they're getting numbered.
Awesome. So we wanted to bring Eric on today. We had a great conversation with AP Financial. AP Financial, they're wonderful. They're easy. They make the process so simple for brand new contractors. They will lend money for new contractors who are buying FedEx runs to go buy a couple of new trucks, and they're just providing a service that many won't when it comes to a brand new business. And with that, there's the idea of we have an amortization schedule. We know what the expenses are going to be. We can talk through the truck maintenance. There's always that depreciation issue. When you're buying the trucks, we talk about the extras. Well, we can lease a truck and we can, buy a truck that we're going to own one day. And we know what kind of goes into that. We've talked about it at length, but there's always that depreciation issue. And one thing that I know I've learned a ton about since I got into trucking was this magical opportunity called Section 179 and bonus depreciation. And I don't know if I use it completely correct, to be honest. And so I wanted to talk to you and give us the real insight to depreciation on semi trucks for FedEx line haul contractor, as well as the accelerated options as well to defer a good chunk or really offset an income in a particular year.
Sure. Well, again, hopefully most people know what depreciation is. And so when you buy a capital asset used in a business, it has a useful life. Nothing lasts forever. So based upon IRS guidelines, assets can last from anywhere from a couple of years, and not in our case, but purchasing commercial property, 39 years. So what the IRS simply says is if you buy a capital asset for, say, $100,000, and based upon its classification, it's got a 5-year useful life. In general, you're writing off $20,000 a year towards depreciation expense over the useful life. That's basic depreciation.
Okay.
Is it typically a straight line depreciation, or do different accounts use different methods?
Again, from a tax perspective, when it's placed in service and what type of asset it is, normally it is not just straight pure, 20%, or if it's a 3-year, 33.33%, so the tax, it gets very complicated. The tax software, whoever your accountant will rely upon the tax software and the rules of the IRS that are built in based upon when the asset gets placed in service during the year, at how much, and all of that stuff. And the software calculates the exact depreciation.
So very important point there is to have a knowledgeable CPA on your side.
Yes, and to
throw,
also
throw them that bone, why don't you?
yes, right. And then also, and like any other business, to keep good records.
Yeah.
That's a great point. Can you just recap quickly what are the records that an owner has to keep?
Again, they should just keep all records. When it comes to acquiring the equipment, they're going to obviously have an invoice, and so they're going to want to keep a copy of the invoice from the dealer that they bought it from, or if it was a used piece of equipment, they're going to want a bill of sale from that. And then depending upon how they finance it, unless they're paying cash for it, they're going to be financing it. And the one thing that I've noticed from most of the finance companies, they will provide at the end of the year some type of statement that will show the total amount of interest costs that they've incurred over the year from that, which is in addition to the depreciation that will be.
So when it comes to depreciation, we're buying a $100,000 vehicle, depreciating it over, say it's 5 years, and that's $20,000 a year that is coming off of our bottom line. That's money that we don't have to pay taxes on. So if you have a year where you're gonna, look to profit 20 grand, when you look at, and I know there's other things that are going to come into place, but in terms of depreciation, that's $20,000 that comes off of my
net income.
My net income. So I'm taxed on less money. As a business owner, obviously we want to pay as little taxes as possible. Is that true for both the state and the federal? When
yes, in general, yes. Yeah. Now states can have, subtle differences about how much can be depreciated in a given year and whether it's an S Corp or a C Corp, but in general, yes. It's the same.
Is there a difference if I buy a new truck versus a used truck? I still apply depreciation?
No, it should, no, there is no, you still get to depreciate the truck based upon the useful life. So you could have, let's say you bought a brand new truck in 2018 for $100,000, okay? And I depreciated it over 5 years and it's down to 0, okay? I won't get into the capital gains of it, but then I buy that truck from Rick, who had it. And Rick sells it to me now used for $25,000 in 2023. So from a practical perspective, I can now depreciate that truck for another 5 years from 2023 through 2027 for $5,000 a year using simple numbers.
Interesting. What about like improvements to a truck or maintenance done on the truck? Does that change any calculations?
You have to look at it whether or not it provides and extends the useful life of a truck. So if you're putting tires on a truck, you're doing an oil change. If you're doing, what do they call the turbo? Those would generally be considered, or a radiator, those would be considered general repairs, and you would just fully expense them. However, you got a truck that's 3 years old, and all of a sudden you do a $30,000 engine overhaul. Now you've extended the useful life of the truck. So in addition to, if you're still depreciating the truck, and let's suppose in the year 3 of depreciating the truck $100,000 over 5 years, but in year 3 the motor blows unexpectedly, so you still have 2 years worth of $20,000 a year, but now you've got another $30,000 expense that can be depreciated over what would be the new useful life, potentially 3 years or 5 years. Or you could potentially, what's called we were talking about it earlier, section 179, and fully write it off. There's all kinds of variables, but yes, you get to depreciate the major improvements.
I was trying to think when you asked that question, I was like, what would you do? And in my mind, I was going to take my, 2012 International day cab that I had, fully depreciated, and I was going to take it into the shop and I was going to stretch it. And I mean, stretch the thing, add 50 feet of space, turn it into a limousine, create Big Rick's limo service, and drive that thing around. It cost me 80 grand to change the truck. I assume in that situation, I could redepreciate that $80,000 that I just put into it.
You are absolutely correct.
Yes. Oh my God. New business. Nobody take it.
You still need a CDL for that? It's a limousine?
I don't.
You need, no, you'll need a Class C or Class B, but you won't need a Class A.
So let's God get back. So get off track. I really want to talk about the accelerated depreciation. I've taken advantage of it. There's times where we had a good year and it's like, whoa, what am I going to do? How am I going to pay taxes on this much money? And S Corp trickles down to me. So we go buy trucks, which we want to buy anyway, but December comes around, we buy them, we put them in use specifically to offset our taxable income for that particular year. That's Section 179, or is that bonus depreciation, and what's the difference?
Yeah, they're similar, but they're different. So Section 179 has been around for a long time. Most of the contractors here, you have a limitation on how much you can use in a current year, and that's upwards of a little over $1 million with a lifetime limit that continues to get up. So if you purchased a $100,000 piece of equipment and you want to fully depreciate it because you've got a profit in your business for $120,000, you can Section 179 that truck 100%, and so you'll lower your net income by the $100,000, and you'll have a net profit then of $20,000 in this case. One not caveat, but one limitation on a Section 179. Let's take the same example. Suppose that you have an $80,000 profit for the year and you bought a $100,000 truck and you want to write it off, the whole $100,000. Well, IRS rules won't allow you to create a loss, meaning so you would only be able to Section 179 up to $80,000. You can't bring your net income below zero when using Section 179. Now, again, the business could still lose money on its own, okay, without Section 179, and you get to carry that loss. But if you currently have a profit and you're looking to get your profit close to zero using Section 179, the simple rules are you can't take it below zero to have a loss in that year. With the special depreciation and the bonus depreciation, again, it used to be 100% of whatever the value was. Now the IRS, after the pandemic and the changes in the tax law, starting this year, the bonus depreciation is decreasing. This year in 2023, it's 80%. Next year, it's 60%, 40%, 20%, and it's completely phased out. And I think it's either 2026 or 2027. The subtle difference with bonus depreciation, if it benefits you, and let's go back to that example, you've got $100,000 of income, and you bought a $200,000 piece of equipment and you want to bonus it. And in this case, you for 80% of 200,000, which is 160,000. So you had a profit of 100,000. We're going to bonus depreciation a piece of equipment that's now worth 160. And now you've got a loss of $60,000 on your tax return, and it's a subchapter S. Yes, in this case, you can have a loss when doing bonus depreciation. And the reason I say that it might be beneficial is because I know some people that are getting started in FedEx, and yet they're still maintaining their other job and they're looking to lower their total income. So in that particular case, yes, you can have a loss. One little caveat that I recently learned, though, with this, if you purchase, let's say, multiple trucks, okay, and you're getting started, and this is something that people need to know, and you want bonus depreciation, you can't pick and choose. So if you bought 3 trucks for $200,000 each, and you want to do bonus depreciation, you've got to take it on all 3 trucks. You can't take it on just 1 truck. Going back to section 179, you can pick and choose. 1 truck, I want to do $100,000. Another truck, I want to do $20,000. And the other one, I want to do $200,000, assuming there's enough profit and we're not falling, below having negative income.
Okay, I actually caught all of that. And for anybody who didn't, just rewind this and play that over again a couple times. And I think and I know we got in trouble for this, but is it as obvious as it seems? Just you depreciate the truck faster than its life or its depreciable life, but then you don't have the truck. The truck, gets into an accident and it gets totaled, or you decide to sell the truck. Is it in that sense? What happens there, like from an accounting perspective?
It is unlimited number of options that can happen. And when I say that, it all depends upon the circumstances. If you fully depreciated the truck, and then you wind up selling it, like again, you sell me a truck and you fully depreciate it and you sell it to me for $25,000. Well, you're going to have a capital gain for $25,000 that you're going to have to report on your tax return. Now I get to depreciate the truck. But on the flip side of it also too is that you could have a truck you've only been depreciating for a little while, it gets totaled and the value of it, and you could wind up having a loss on it. So, and it could benefit you that way. So in this, what you're looking to cover in this particular segment, I wouldn't go down that rabbit hole. It depends upon each individual situation.
What about?
Sorry, go ahead.
You go ahead. I was going to ask, what about leases? Can I depreciate leases?
Yeah, so we're talking about that also too. It depends upon, and I got to look up for the information, and I'll have it readily available if anybody wants to call and ask. So people need to understand there's 2 types of leases. Everybody thinks, oh, I just go get a lease on a truck and I get to fully expense my lease payments to AP or to REI or whatever. You actually have to look at the fine print in the lease to determine whether it is a standard lease or a traditional lease, like people mostly get when they think about when they go buy their car, or they go lease their car for 3 years at the Honda dealership, and they turn around and they use it for business purpose, and yes, they get to write off the lease expense. When buying or leasing a truck, if it's determined that it's a capital lease, okay, then in effect, you are buying the truck from the leasing company. And then, in effect, you have to depreciate the truck over that period of time. You'll get to write off the interest expense, but you may or may not necessarily get to write off the entire lease payment, what you're paying to them, because theoretically, you've bought the truck, and part of it is principal that you're making to the leasing company that you got the truck from, and part of it is interest, and part of it's depreciation. So you have to look at the details of the lease, and I'll get some more information for when people call and determine, and maybe we have that on a separate issue for 5 minutes or 10 minutes. What's the difference between a regular lease, standard lease, and a capital lease?
Yeah, for sure. Every time I log on to TikTok, right, I'm learning new dance moves, filming some stuff, I'm just getting likes. That's what I do. It's how I'm spending my days. There's a guru that's telling me that if I don't want to pay taxes for my business, I just go out and buy a G-Wagon, and it's 250 grand. I just don't have to pay in taxes. And I know that's not accurate, but from your perspective, I assume they're using bonus depreciation to get to that, to offset that 250K, say what the cost of a G-Wagon is. Where I have a trucking company, so can I just go buy a truck, and I guess it's over 6,000 pounds is the key, but can I do that if as opposed to buying another semi truck, can I just buy a G-Wagon? How does that work? Where am I going to get in trouble for doing this?
Well, explain to me, maybe I'm getting older than you guys. Well, what is a G-Wagon?
The Mercedes kind of Jeep-like truck.
The boxy one?
Yes.
The boxy one, yeah.
Escalade, yes. Range Rover, a big...
Yes.
What the cool kids drive.
Yeah, there you go. Okay, yeah. Well, I'm like, yeah. I hold on. I've got a 2013 Honda Pilot with 180,000 miles on it. I drive my cars into the ground. Yes, exactly. I'm like Warren Buffett. I live cheap. I'm the millionaire next door. Sorry. So, but anyway, but back to that situation. There is additional bonus depreciation, but then there's also limits that the IRS has when it comes down to a vehicle and then how much can actually be done. And I don't have, the exact numbers in front of me. But coming back to the tractor trailers, and we were talking about it earlier, I went back into my own case and looked at a couple of trucks that I bought back in 2019 without actually taking bonus depreciation. But because they're over-the-road tractor trailers, people are used to hearing that the depreciation period is 5 years. When you're talking tractor trailers over the road, 80,000 pounds, really the depreciation period is for the most part only 3 years.
Okay.
So, yeah. Now it does technically stretch into the 4th year, but looking at mine to give you for an example, even in year 1, I got 33.3% of the value of the truck. The second year, it was another 44.5% of the value of the truck. So that brought me up to nearly 78%. The third year brought me up to 93% of the value of the truck. And then there was the last 7.5% in the 4th year. So it always sounds nice to have this option of taking bonus depreciation when it's needed, but people need to plan out what it's going to look like. And so you get something up front, but then are you going to pay in year 2 or year 3 if you use up all the depreciation in this year? So, and that comes into tax planning with your, CPA. So if you've got a really tough year and somehow you think the future years are going to be not as great, then take it. But in my particular case, and I sometimes advise clients, is that, yeah, it's out there, but maybe you want to level out how much you're paying to the IRS. So instead of having a 0 bill this year and 50,000 next year, have a $15,000, $20,000 a year bill going along until we hear something about major tax law changes as far as marginal tax rates. And that's a whole different subject.
And I have a question. So this is a much larger topic, hard to answer just in a couple minutes, but if I'm looking to purchase runs, do you ever consider previous or depreciation schedules in your valuation?
No, there's no need to, because the reason is if you're doing a true asset purchase agreement, okay, an asset purchase agreement from a stock purchase agreement, and I'll explain the two of them quickly. The asset purchase agreement, you're buying all of the assets, okay, from the company. The runs are going to have a value, and let's suppose you and I decide, you've got, 8 runs and you've got 10 trucks and it's $2 million, okay, for the business. All right. So you and I are going to come to an agreement with our attorneys, and we're going to put a value on the runs and we're going to put a value on the trucks. So if we determine and we come to an agreement to say, all right, the runs are worth $1.5 million and the trucks are worth $500,000, then I'm going to amortize the runs for $1.5 million over 15 years. And I have now acquired those trucks as if even though they're used, but they're brand new to me. So I get to depreciate that $500,000 however I want.
Redepreciated. And
Yes.
and I know I'm pretty sure I know the answer to this. You talked about buying that business with a new company. Let's say that I came to, Christian's Trucking, and I said, hey, I don't want to go through that process of the FedEx. I'm just going to buy your ownership of the business from you, and I'm going to be the 100% owner of Christian Trucking. Am I able to redepreciate those in a stock sale? And I'm pretty sure that's the right terminology. I'm doing a stock sale. So the business still I'm just buying the business. Is there a way to redepreciate those?
No, simply put, because now you are buying the stock of the company. You've become the new owner, the new shareholder. So whatever has been done in that company already, whether the trucks have been fully depreciated or partially depreciated, you just simply continue on doing what has already occurred. So if the trucks have been fully depreciated, there's nothing more to do. If the trucks are halfway, it's going to continue on because the company is remaining as is. It's the same Christian Trucking with the same EIN number. It's the only thing that's changed is the shareholder or shareholders.
Got it. Okay, makes perfect sense. Eric, thank you. This is something everybody we hope to do more often. Eric, obviously you are welcome back. And I think there's very particular questions we would love to, especially as they relate to the shows that we're doing or the topic of the week, just, kind of hit you up and just see what your thoughts are from your perspective.
Sure. Always available.
you,
Again, want to help out you guys and want to help out the other, new people coming into the fold.
Yeah. And Vin, let's make sure we put his information up there so people don't have to call me and ask, how do I get in touch with Eric? I want Eric. Whatever.
Thank you, Eric.
All right,
Thank you guys.
Thank you very much.
The opportunity.
Talk to you soon. Everyone.
Appreciate it.
Thank you guys.
All right. There's a lot there.
Yeah. Eric's, he's impressive and he's a wealth of knowledge. So reach out to him. What'd you learn?
Yeah.
Tell me something you learned tonight.
I learned that I don't need to go and spend a bunch of money on a truck. I can finance it.
Yes.
And have operating capital, which is important in any business you run. I think that's the biggest thing.
We've stuck with that 5-year depreciation schedule. You just know. And I don't know if that's accurate anymore. And I'm going to kind of look at our stuff and rethink the way that we do that. So I'm looking forward to that. And that might have just saved me or made me hopefully a bunch of money today.
There we go. That's what we're doing this for.
Everybody, thank you so much. This was kind of informative. We wanted to play both of these. Thought they were worth just playing in full without us commenting every couple of minutes. But next week, we have an episode we're excited about for next week. Tell them what we are doing.
Get this a lot. Pretty much everyone who calls is saying, what will my day be like if I'm a contractor, right? What am I going to be doing? What do I have to worry about? So next week's episode is a day in the life of a contractor. We're going to invite some guests, have you hear stories from first world experience, and just start into these questions, right? What are you responsible for on a daily basis, weekly basis, monthly, and so on?
Yep, exactly. What does a contractor need to worry about from the day to day? What does their life look like, especially when they're trying to multitask, run other businesses, deal with family, while dispatchers are, calling them up? Where's your drivers? How do you manage all of that? So next week we want to dive into that and get very particular. Kind of stories, hopefully funny, interesting stories from contractors, kind of how they deal with it and strategies they use. So be around next week, 9:00 Tuesday night. We would love for you to join us live. So special thanks to Emily for manning our chat. Ryan, check out his podcast. Eric, the CPA, thank you. Vin, another badass show, phenomenal. Steering the ship as usual. All right, bro. I will probably see you pretty soon. Maybe come over.
Have a good night.
If you want to hang out or something.
Yeah, let's do it.
Come to the Jers.
Talk about depreciation.
You know what it is. All right. Thank you, everybody.
All right, guys. Have a good night.
Night.
Including another day of programming. Miami, Fort Lauderdale. A very pleasant and peaceful good night.